The last topic that we will be discussing in our work on cost allocation is how to allocate joint costs. A joint cost occurs when a single manufacturing process results in two or more different outputs. Here's a joint process that has joint costs and ultimately results in two products. Those products are called joint products. And the place where they separate is called the split-off point. Beyond that split-off point, each product has its own separable cost that we can measure with a reasonable degree of accuracy. The question is how to account for the joint costs, how to decide how much of those joint costs belong to each product. There are several mathematical models that can help us to do this. The first model is the physical outputs method. Let's take a look at an example. We have a company that has a peach orchard and it grows peaches and then processes those peaches into several different products: peach halves, peach slices, and peach puree. The firm has a total of $70,000 of joint costs to bring the peaches to the point where they are ready to be processed into these three different products. The physical outputs method says to allocate those joint costs according to some physical measure. It could be gallons, it could be square feet. In this case, it's pounds of peach product. So we've accumulated data on the total weight of the peach halves, the peach slices, and the peach puree, and we've added it up to find the total number of pounds of peach products. So the peach halves represent 160,000 pounds out of our total 280,000 pounds. That means that they represent 57.1% of all of the weight of our peach products. So they get 57.1% of the joint costs. The peach slices weigh much less. They only represent 28.6% of the total weight of peach products, so they are assigned 28.6% of the joint costs. The peach puree weighs even less. It is only 14.3% of the total weight, so it is assigned 14.3% of the total joint cost. Now that we're finished allocating, we can check our work, and we see that we've allocated 100% of the relative weight and assigned all $70,000 of joint cost to our products. Another method is to use the sales value at the split-off point. To do this, we need some additional information about how much we can sell each of our peach products for in the market. Peach halves sell for 50 cents a pound, so we can multiply the selling price times the number of pounds to get the sales revenue for the peach halves. We can do the same thing for peach slices. 40 cents a pound times 80,000 pounds. And we can do the same thing for peach puree, 30 cents a pound times 40,000 pounds. If we add up the sales revenue from all three products, that gives us our total sales revenue. Now we can use the proportion of each product's sales revenue out of the total sales revenue to assign the $70,000 of joint costs. Peach halves represent $80,000 out of $124,000, or 64.5% of the total revenue. Peach slices represent 25.8% of the total sales revenue, and peach puree represents a little under 10% of the total sales revenue. Add that up, we've accounted for all the sales revenue. Now we can use those percentages to allocate the joint cost. Peach halves contribute 64.5% of the revenue. They get 64.5% of $70,000. Peach slices represent 25.8% of the sales revenue. They get 25.8% of the $70,000 joint cost. Peach puree represents a little less than 10% of all the revenue. It gets a little less than 10% of all of the joint costs. Add up our allocated joint costs, it must equal $70,000. A third way to allocate joint costs is to use net realizable value. This firm has a choice. It can sell its peach halves as they are to some other firm, or it can the peach halves. In that case, the firm will get more revenue, but it will also incur separable costs for the canning. Therefore, the net realizable value of the choice to can the peach halves is the difference between the sales value for the canned peaches and the separable cost to change peach halves into canned peaches. Similarly, the firm has a choice with the sliced peaches. They can either sell the peach slices to another firm as they are, or they can make those slices into pie. Again, the sales value, if they turn the peach slices into pie, is much higher, but they also incur separable costs to do that. So the net realizable value for turning sliced peaches into pie is the difference between the sales revenue from the pies and the cost to make them. Finally, the firm can either sell its peach puree as it is to another company, or it can turn the puree into juice. If it turns the puree into juice, it gets more sales revenue, but again, it incurs separable costs for that process. So the net realizable value is the difference between the sales revenue for the juice and the cost to turn the puree into juice. We can now add up the net realizable value for each of these products and use each product's proportion out of the total to allocate the $70,000 of joint cost that was necessary to get up to the point where we had peach halves, peach slices, and peach puree. We can also check to make sure that the total difference between sales value and separable costs is equal to the sum of the individual differences to check for math errors. The canned peaches represent $120,000 out of the total of $187,000. They represent 64.2% of the total net realizable values. Similarly, the peach pies represent $50,000 of net realizable value out of the total of $187,000, or 26.7%. Finally, the peach juice represents $17,000 of net realizable value out of the total of $187,000 of net realizable value, or just over 9%. We can add these up to make sure that they equal 100%, and then we can use these ratios to allocate the $70,000 of joint cost. So, the canned peaches get 64.2% of the $70,000. The peach pies get 26.7% of $70,000, and the peach juice gets just over 9% of the $70,000. And we can also add these allocated costs up to make sure that they equal the total joint cost for creating all of these products. So how do we choose a method? And the answer is, it's really an issue of storytelling. If we believe that products that have a larger physical measure, products in this case that weigh more, deserve more of the joint costs, then we can use the physical method. If we believe that using the sales value at the split-off method is the best storytelling, then we can use that method. On the other hand, if we feel that using the net realizable value method gives us the best matching, then perhaps we should use that method. If you asked the manager of the canned peach department, the peach pie department, and the peach juice department which method they liked best, each manager would choose the method that allocates the smallest amount of cost to his or her department. So, the canned peach manager is going to prefer the physical units method because canned peaches represent a smaller physical weight than they do in the other methods. The peach pie manager is going to like the sales value at the split-off method, and the peach juice manager likes the net realizable value method. Whatever method you choose is going to affect your understanding of how much each of these three products cost, and that is going to affect the selling price that you choose and the profit that you recognize, and also the way that you market these three products. In the long run, we are what we are rewarded to be, so make sure that you choose a method that rewards people for the things that you want them to do. A related topic is whether to sell our product at the split-off point or to process it further. In order to do this, we need a couple of other pieces of information. Incremental revenue is the difference between what we could sell the final product for and what we could sell it for if we decided not to process it further, but sell it at the split-off point. Separable costs are the costs that are incurred between the split-off point and the final product. And the basic decision rule is only to process our products further if the incremental revenue that we get is bigger than the separable costs that we incur. In our example, we know the sales revenue that we could incur if we sold our peach halves as they are at the split-off, or if we decided to can them. The incremental revenue is the difference between those two sales values. Similarly, for peach slices, we know what we could sell them for as slices, and we know what we could sell them for if we baked those slices into a pie. The difference between those two numbers is the incremental revenue for peach slices. Also, for peach puree, we know how much we could get if we sold the peach puree at the split-off point versus how much we could sell it for if we turned it into peach juice. And the difference between those two numbers is the incremental revenue. Now, how much additional profit do we get if we decide to process each product further? In the case of peach halves, we get $100,000 of additional revenue, and it only costs us $60,000 to can those peach halves, giving us a $40,000 increase in profit. So we would decide to process them further. When it comes to the peach slices, we get an additional $88,000 of revenue, and it only costs us $70,000 to process the slices into pie, giving us an increase in profit of $18,000. So of course we're going to process the peach slices further. When it comes to the peach puree, we increase our revenue by $38,000. It only costs us $33,000 to make the peach puree into peach juice, so it increases our revenue by $5,000. So we would process the peach puree further as well. Now, what would happen if the separable costs for transforming peach puree into peach juice increased to $39,000? Now, all of a sudden, the incremental revenue that we would get from making the juice is less than the cost to make it. So if we chose to turn the peach puree into peach juice, it would actually decrease our profits by $1,000. In that case, we would probably decide to sell the peach puree as it is. Always, for these decisions, subject to qualitative consideration. So, for example, if it turns out that our peach juice and our peach pies sell better when we also market our peach juice, we might decide to turn the peach puree into peach juice, knowing that it's going to cost us an extra $1,000, but believing that we will more than make that up in increased sales of our other products. A related issue is byproducts. A byproduct is something that is made in the process of making our main product. And the question is, how do we account for it? Well, there are two kinds of byproducts. Some byproducts have no market value at all. In that case, we throw them away. There is no accounting. However, it is possible that we might have a byproduct that has some small value. For example, we manufacture lumber for construction work, and it also produces sawdust. Sawdust is not nearly as valuable as the lumber, but it has some value. And the question is, how do we handle that byproduct value? One way to do this is to use the net realizable value from the sale of the byproduct to reduce the reported cost of the main product. So let's look at an example. A company makes a main product, and a byproduct results from what is essentially a joint process. We know how much the joint costs are. The main product sells for $10 per unit. The byproduct sells for $1 a unit. In this case, we can figure out the production cost for the joint process, $480,000, and we can subtract the net realizable value of the byproduct. If we end up with 10,000 units of our byproduct and they can sell for $1 a unit, that means we can reduce our production cost by $10,000. In that case, we would recognize the new cost of the main product to be only $470,000, which we would allocate across all the units that we make, and that would reduce the recognized cost for each unit. An alternative way to handle byproducts, rather than using their value to reduce the cost of the main product, would be to record the byproduct under other revenue on the income statement. That tells people this is not what we do for a living, but it is something else that will make our net income larger. Let's take a look at a practice problem. We have a joint production process that costs $240,000 and generates 2 products. We also have information about how many pounds of each product is produced and its sales value at the split-off. So, my question to you is, how much of the $240,000 joint cost is allocated to each product using the physical quantities method? P1's share of the $240,000 of joint cost using the physical quantities method would be its 15,000 pounds divided by the total 40,000 pounds between the 2 products. It would get $90,000 of the joint cost. P2 would get its share of the $240,000 of joint costs by multiplying that by its 25,000 pounds out of a total of 40,000 pounds, which equals $150,000 of joint cost. Add them up, they must equal the total joint cost. Now, let's say that the same firm wanted to use the sales value at the split-off method. So we're still going to allocate our same $240,000, but now we're going to do it in proportion to how much each product contributes to sales revenue. P1 represents 3/5 of the total revenue, so it would get 3/5 of the total joint costs. P2 also gets its share of the $240,000 joint cost, but because it represents only 2/5 of the total revenue, it gets only 2/5 of that cost. Altogether, we have accounted for all $240,000 of joint cost. Here's another situation. Same firm. This firm still wants to use sales value at the split off, but now it wants to recognize $30,000 of revenue generated by selling its byproduct as a reduction in the joint costs of its two main products. How much joint cost would be allocated to each of the main products under this scenario? Well, the first thing that we have to do is determine how much joint cost remains. We had $240,000 of joint cost. If we reduce that by the $30,000 of revenue from the byproduct, now we only have to allocate $210,000 to each product. If we use the sales value at the split-off method, that means that of that $210,000, 3/5 will go to P1, and 2/5 of that amount will go to P2. Add those up, and they completely explain the $210,000 of joint cost.